Hi, folks. Good morning. Welcome to the Short Vol Show Live. My name is David Lincoln. Wanted to do a couple things today. Wanted to go over the position. Let's talk about where we stand with volatility. If you're new here, this channel deals with trading and volatility and the VIX. And we just came off of a spike in volatility a couple days ago. It was launched probably on Thursday. If we look back, we can see here, if we go through a little bit, we can see exactly where it started and where we are in it now. But if I get out of the way for a second here, if we look, we can see here is the VIX in the last few sessions. Now, the VIX is the SIBO Volatility Index, and it's a number based on a formula. And basically, the most simple way of describing it is when people get nervous, this number goes up. And when people calm down, the number goes down. So for several weeks, we've had a very sort of calm environment. If we go to a 20-day chart here, you can see, and actually, let's just even move out further. And I'm going to go to a custom chart. Let's look at 90 days, so 3 months. So in the last 90 days, you can see, well, you can't see because it's like, we're kind of off the chart here. So let me see if I can fix that really quick here. So display, I don't know, it's bigger than it's supposed to be. Transform, reset, transform. All right. So in the last 90 days, things were pretty calm into through July, and then August, we get this spike here. You see it goes way up. And this started out with some fears about China. There was a president tweet and got the ball rolling. And then the market, usually there's a spike when the market goes down. It's not always that way, but usually what happens is the market goes down. So one way to look at the stock market is to look at an index of stocks, or the futures on an index. I like to look at the /ES, the E-minis. And you can see this down move here coincides with the pop in the VIX. So here's the market. Market starts to go down. The VIX goes up because people are nervous. They're like, uh-oh, this could continue going down. And you see this big spike up here. Now, if we were to look at, so that's a 90-day chart. Now, if we were to kind of back things up to like a 3-year chart, puts things more in perspective, you can see on the 3-year chart that here is that most recent up move. Looks a little bit smaller when it's compared with 3 years, but you can see this thing has a history of just this sort of, I like to call it oscillating. It'll spike up, go back down, spike up, go back down. And this really big spike here is what people call the Volmageddon. And then we have another spike in December. And if you look at that back to the chart of the futures on the market, you see it corresponds with down moves in the market. Now, that really big spike, there's a down move in the market, but not so much. I mean, if we go back to the VIX chart, this spike here is a lot smaller than this huge spike, and yet the move in the market was much bigger on the smaller spike. So it doesn't always correspond to exactly what's going on in the market, but generally a down move is going to create fear and volatility is going to go up. So we had that recently right here. You can see this most recent down move, which is contributed to the spike here in the VIX. So where do we stand right now? So the normal, let me just explain one more thing. The VIX has futures on it, and futures are for different months. And the way these futures relate to one another is something that we also follow. To that we can go to VIX Central. And if I pull this chart up, this is going to show each one of these dots is a different VIX future, and you can show how they relate to one another. Right now, this flat line that goes across the screen is the spot price. That's the actual price of the VIX. These blue dots are each different futures, the August, September, and you can see how they relate to one another. currently, the closest future to expiration, the August one, is the highest price future. That's kind of reverse of what we see under normal conditions. Under normal conditions, the closest future is usually the cheapest future. If I pull out my little handy dandy snipping tool here and copy this, then I can write on this with a pen. So usually the chart, it looks more like this. And it's so hard to see where my little dot is because it's a really small little dot. Let's see if we can find it. Okay, so normally the chart looks like this, with the futures sloping upward. Here's a dot, maybe a dot here with my terrible writing. And then the VIX price, or the VIX spot as we call it, or the cash, below. And then the futures sloping upward. But now, since we're still coming off of a spike, you can see the futures are all still below the price of the VIX, and which is not normal. If we continue to sort of rally to go sideways in the market, then we will see this VIX continue to move lower until it's below all the futures, and then these futures will kind of sort themselves out so that the closest future to expiration is the lowest, and the other futures are slightly a little bit higher than them. You can see the December future is the lowest one of all in this chart, and that is kind of like a thing, that December has a lower volatility than other months because there's lots of holidays during that period. And so you'll find that usually the December future is a little bit lower than the ones around it. However, it still should be higher under normal conditions than the front future. So we should see, if we get a little bit of a rally today, we should see this spot go down below the price of the futures, and the futures arrange themselves in a way that I just showed on the chart, where the August one is the lowest price future, and then they sort of move up accordingly. And that kind of makes sense if you think about, well, what's the chance of something happening that's volatile? It kind of would make sense in your mind that, like, well, the more time you have, the more chance there is for something to happen. So farther out in time, futures should be kind of worth more than the front month future. What this says right now is that it's likely something is going to happen right away, and there's less likelihood that it's going to something's going to happen after that, farther on down the line. Sort of, you could kind of evaluate this chart to be saying that. But right now, we're almost exactly the difference between the price of the front month future and the actual spot price. Some people call that the roll yield. Right now, the spot price is close to the future. It's only 9 cents off, so you could say that the roll yield is expressed in actual pennies. You could say it's 9 cents away. You could also express that as a percentage term, but I'm just expressing it in pennies right now. And then we are in backwardation officially, which means because the front month future is higher than the second month future, so that's called being in backwardation. And this is by a small percent. You can see the percent is 0.79%. So we are in backwardation by a small percent right now. My recent new thing is to publish in this account that I've made public, is to publish how the account is doing every day, so we can track that together. So let's do that now. Here's the current P&L for the account. If we look at these numbers here, what does this show? Well, this shows option buying power 98 cents. That's how much funds we have to buy or sell options. Net liquidity, $3,098. Day trades left. This is showing there's the pattern day trade rule, so you're allowed up to 3 round trips in a 5-day period, and currently we have all those 3 round trips available to us. This available funds for trading shows $50.98. Now, what this means here, or why this says this here, is that I deposited $50 into the account a couple days ago, and it hasn't cleared all the way to be able to be used for options, but it is in the account there. You are allowed to use money that you deposit in your account almost immediately to actually buy stocks, but to trade options, it has to wait, I think, 5 days for it to clear. So that's kind of the significance of that. I wanted to talk for a second today with you about a couple things, but one of the things, one of the main things is a bunch of viewer questions, and a viewer was asking about my watch list. So let's talk about watch lists in the stock market for a second. I can kind of pull up part of my watch list right here for you. A watch list is a list of numbers that you watch to kind of give you a sense of what is happening in the market. And so I can pull up part of my watch list here, and let me see if I can kind of move this up a little bit. I kind of tried to do a close-up so you could see it better, but let's start at the top and we'll slowly move down. So I have here, and let's just talk for a second about a watch list. A watch list is going to give you an idea of what's happening in the market, and I would say you would like to pair this also with some sort of news feed that's going to tell you news stories that are happening right away. And I like to go to Drudge Report to see breaking news, drudgereport.com. We can go and check that out right now for a second. But there's all kinds of different news services out there, and depending on your, everyone has a bias. Just be aware of the bias. Drudge Report, for example, is biased towards conservative, but it's an aggregator, which means it just pulls in lots of news stories from different places. So let's see if I can fix this here. All right, so here's Drudge Report. Let's see, mystery military space plane mission hits 700 days. It's important for us as traders to be on top of world news. And I know a lot of people these days don't watch world news anymore or aren't interested in it. But as a trader, you're going to need to know what is going on with world news and keep abreast of it. It's very important that we have that information available to us when trading, because it's going to affect our decision making. And you want to know what's going on out there. Now let me see why I am fighting opacity issues here. Okay. So sorry, I'm in ghost mode, and I'm trying to figure out why I'm in ghost mode here. But let me continue here. Let's see, color correction. Looks like it has something to do with this. Opacity 76. All right, that's better. So let's talk about our watch list. To have a well-rounded watch list, you need a couple things, and let me just go over mine with you for a second here. For me, it's important to have some of the major indices, and I'm still trying to get out of the way. Okay. And so if we start my watch list here, I've got the Dow Jones Index, the SPX, and then I've got this /YM. Now, this is on Thinkorswim. You could use some other platform if you like. I've got /YM, which is the Dow futures. Then I've got the NASDAQ, and I've got the E-mini. So the three main indices that I sort of follow, there's the Russell as well, but three main indices I follow are the Dow Jones Industrial Average, the NASDAQ, and the SPX, which I follow the E-minis for. Then beyond that, I have a list of stocks that I follow, and some are representative of like what I would consider sort of blue chip, which would be sort of Apple. We'll go down the list, but so as we go down the list here, we've got BYND, which I have been trading a lot lately, so I've got that on there. UVXY, then I have the VIX, and then if we move down this list a little bit here, next I have, these are different VIX futures, okay? And you need to update these every time a VIX future expires. I get the list from barchart.com. these letters Q, U, X, Z represent different months, and thus I can see what each future is doing without pulling up like VIX Central or some other chart to. And you can see here from this list that the front month future is higher than the second month, although they're quite close right now. As we continue to normalize, the front month future should become cheaper than the second month, and it should go down the line like that. But right now, you can see that the VIX is cheaper than the front month future, but still more expensive than the second month. So the VIX is slowly going to move down through the futures as we normalize here. Assuming that we don't crash more. Okay, so after that, I've got VXX. Okay, UVXY and VXX, two big exchange-traded products to do with the VIX. Then I've got the VVIX. Now, the VVIX, of course, the volatility of the VIX. So what this means is if we take a look at the options on, there are options on VIX futures, which I don't trade myself, but a lot of people do. And if we've got buyers of options on VIX futures, then this number is going to go up. If people are selling the options on VIX futures, then this number is going to go down. It can be a bit deceptive because you kind of want to dig down and see exactly what's trading in the VIX, because sometimes somebody will do a spread and it will make this number go up or down, even though the spread is not really meaningful as far as giving a clue as to specifically people coming for these options or not. So you want to kind of dig deeper into the VVIX at times. People attach different amounts of importance to this number, but I do follow it, and there it is. ACB, another, this ACB and TQQ are two. ACB is Aurora Cannabis, and TQQ is the leveraged fund on the NASDAQ. These are two that I've been trading recently. That's why I have them there. Tesla, I like to watch Tesla because it behaves differently than other stocks a lot, and tracking it over time gives me insight into what's going on. A lot of times, if you get to know the personality of different stocks, then they can give you some idea of sort of, for example, how serious a sell-off is. I know, for example, the sell-off 2 days ago, Apple was only down slightly, so that tells us that people aren't worried. Sometimes when you see a big sell-off and you start to get nervous, then you'll look at these different stocks, and some of them aren't down at all, which makes you believe that it gives you just more information on how serious the sell-off is or which parts of the market it is affecting. Now, I'll take names off my watch list and leave them on, and they'll get pushed down as they're less important, and they'll kind of go through a rotation. So we see Afria here and Xilinx. But as we get on the list here, I've got Tilray, which was that big high-flying cannabis stock before. Carvana, which I've been interested in. Look, Carvana's up $12 today. I guess it must be post-earnings. Amazon is a very important part of the market. We know that stocks like Amazon and Apple, they make up a big portion of a lot of these indices, so they're very important to the market. But some of these other ones are just ones that I'm interested in and I follow over time. We've got some more of these cannabis names. Neo, I was following a lot of these stocks that have to do with electric cars. And then as we go down the list further, I do have gold. That can be an important one. And some other, this is bonds. And here's a Russell index. And let me see if I can move down my, I guess this is another way that instead of readjusting the chart all the time, I could have just used this. But then I've got Skechers and Chewy. But in general, I'll have stocks that either I'm just kind of following myself, thinking about putting a trade on, plus the major indices. So it's a pretty simple watch list that I have. That's CL would be oil. And, you know, it's interesting how different the market focuses on something different depending on what day it is. So, for example, yesterday the market was very focused on bonds, and everybody was talking about bonds. There was action. The 10-year bond went down before the open, and everybody was talking about bonds. Other days, people are all focused on China. Other days, it's something different. It really, the market's focus switches over time. It's never, and it's not always clear what the market is focusing on, but certainly it switches over time, and people's focus switches over time, and your watch list can switch over time as well. Now, I also have different watch lists that I can put up. I've got, sometimes I play with these, and somebody will give me a list of stocks that I'll start following for a little while. Sorry, it's not really showing that, is it? So I have these different watch lists that I will kind of rotate through at times. So let me pull this over here so you can see this a little bit better. All right, so if I pop through a couple watch lists here, you can see. And, this is a powerful thing. I love to go through these lists. If we look at Thinkorswim, it's got lists that you can go through, which I think are really interesting. Let me minimize this again here so that we can see it better. So transform, fit the screen. All right, so Thinkorswim, if you go in here to lists, I like looking at these top 10 most actives. I like looking at these top 10 net gain, net loss, and percentage gain, percentage loss. This doesn't update till the open. So looking at it now is going to show you yesterday's, but this will show you where the action is right now. And it's a great way to find ideas. This top 10 percentage gain, top 10 net gain. I like looking at these because it gives you an idea of what's going on with the market. Another way to figure out what's going on with the market is to look at StockTwits and look at the most active list. So if we were to pull up StockTwits here, just see what people are talking about. That's an important thing. Now, this is a spot where being in one of these stock chat rooms can be useful. I think it's a scam to pay money to be in a chat room because there's enough free stuff available. But trending, if we go into trending, and you can also see the way they changed the way StockTwits is set up about every 5 minutes. So it evolves. But if we look here, trending now, it's going to give you stocks, Roku, stocks that are moving. And I would, check these out. These are some of these earnings plays that we've been talking about. BKNG up $95. This is briefing.com. And you want to see what people are talking about and where the action is, because this is going to give you something about the tone of the day. One of my mentors, Cabot, once taught me, he said, you come into the day of trading and there's going to be a theme that develops. And you want to ask yourself, what's the theme of today that's developing? And I'll put that question to you right now. What is the theme of today? I guess we already have a hint that one of the themes is the market recovering from this recent down move. So let me move my list. I feel more comfortable when I have my list up here. But we're up today, but we're kind of recovering from a down move. Let's move out of the way. We can see right at 9 o'clock here, we have sort of a gapping up movement here. All of a sudden, the VIX is down 70 cents, and we've had an up move. The other thing I'll look at is you can pull up on this, and I would recommend getting Thinkorswim to everybody because it's free. But you can pull up Trader TV, pull on CNBC for a second, see what the talking heads are talking about. Because whether you like it or not, now, usually CNBC, they're going to be cheering for the market. They're always positive, or they're mostly always positive, and they're always cheering for the market. Remember, this is run by corporations, so they're going to have a positive slant towards corporations. But I like to see what the talking heads are talking about on CNBC. The more information you can give yourself, the better. If you get overwhelmed with the information, then turn it off for a little bit. But so the theme today, I would say, would be Roku earnings were good, and Roku's up a lot. it looks like Carvana is up a lot too. Now, I was thinking about doing a play in Carvana. It's a good thing I didn't, because this looks like a pretty big move up here. I've been following this one for a while, but it hasn't gone to the highs again, but it definitely has popped up higher. All right, so let's go to the YouTube channel and do a little bit of Q&A. Let's see. We have some questions. We tried to buy Beyond Meat burgers in the grocery yesterday. Sold out. Huh. They're all over the place in my grocery store, not sold out. Did you ever trade the medium-term products? I have traded ZIV before, and I recommend ZIV highly for your longer-term type investment type thing, because look at ZIV in the Volmageddon. For you know, when you're thinking about long-term, you want to trade something that is going to perform well in the worst circumstances. And look at ZIV. When XIV blew out, ZIV went down, but it didn't blow out. So I like ZIV a lot. The other thing I like, which I've talked about before for a long-term investment, is USMV. What USMV is a low volatility ETF. And this thing, it performs pretty much like the SPY on the upside, but when things get really hairy to the downside, it performs better than the SPY to the downside. So I like this one a lot. USMV. All right, so let's go to YouTube now for a second and look at some of our comments. One comment I got from somebody just yesterday, and this was from Twitter, Q&A, was, let's see if I can find it. This guy asked me if I was on drugs, which is funny. I've been sober for several years, so have not, so I'm definitely not on drugs. I haven't taken a drug or a drink since 2009. I get excited because I think this stuff's exciting, so maybe I seem a little hyperactive sometimes when I'm talking, but definitely not on drugs. Not to say that I'm not, no judgment on anybody. Drugs have been fun in the past for me at times, but it's just not my thing anymore. It didn't work out well for me, so I have stopped that. All right, so let's take a look at here's my comment list. Have you ever traded SQQQQ? No, I haven't, but I have traded TQQQ before, which is, the inverse of that, I believe. Let's see. When new shares of UVXY or VXX are created and are available, does that create pressure to the downside? Okay, so this question goes to, it goes to a couple things, but ETFs are kind of a little bit complicated vehicles in that ETF shares can be created out of nowhere. If an authorized participant wants to create shares, what they can do is they can deliver the equivalent in futures of 50,000 shares to UVXY, and then UVXY will trade that for shares for them, and shares can be created. But the supply and demand, I think the more of the question here, though, goes to the supply and demand of UVXY and the VIX. And this is a common question people have. Like, with stocks, if a lot of people want to sell the stock, it goes down. However, with UVXY, if a lot of people want to sell UVXY, then it might go down or it might not go down, because most of the actual driver of what's moving UVXY comes from trade in the SPX option. So yes, if enough people sell UVXY, then it will result in pressure pushing down on the futures, and that may affect things to move. But in general, most of the supply and demand is coming from the SPX and options trade there, and that is, from a numbers perspective, overwhelming any actual trade in UVXY. The way ETFs work as far as creating shares is authorized participants can create a unit, and it's usually 50,000 shares. If they want to create a unit of 50,000 shares, what they do is they deliver the equivalent of 50,000 shares worth of, and somebody will correct me if I'm wrong here, of a mix of futures to the fund, ProShares fund, and in return, the ProShares fund creates 50,000 shares and gives them to the authorized participant, and they can take those shares and buy them or sell them in the open market. Let's see, I've got comments held for review, and we will accept them. All right, so let's look at some other questions here from the community. Hey, when does UVXY report earnings? All right, so that is in response to, we joke around a lot on StockTwits and say like, oh wow, the stock's going up. It must, with UVXY spiking, we joke around and say, oh, earnings must have come out well in this stock. It's just kind of makes fun of people's misunderstanding of UVXY. All right. Good info. I learned a lot, but I think using the term manipulation is a better word than fake news when it comes to UVXY price compared to the VIX. The word fake news is used way too much. I know you are kind of using it in jest, but still. So I think this question is interesting, or this comment is interesting, because it speaks to people's sensitivity about politics, and people get sensitive if you say fake news, because I think that they think I'm mocking conservatives when I say that, which is not the case there. When I say fake news, I'm just saying that people are misunderstanding what is going on here. And in that particular case, I was talking about how one day the VIX was down, but UVXY was up, and people are saying that that's manipulation. But it's not really manipulation, because it is just a case of where UVXY is based on VIX futures. So whereas the VIX was down, the futures were up. And so UVXY is going to do whatever the futures do. Now, and you can actually, if you get confused about UVXY, you can actually do the math yourself to see that it's not being manipulated. So let's take a look at that really quickly. Okay, so if we look once again at our futures here, and I'm just going to pull them up real quick here. If we take a look at the futures that comprise UVXY, which is the front 2-month future. So if we pull up the front 2-month futures here, then we can get an idea of what UVXY should be doing. And sometimes it gets a little bit distorted, because at the end of the day, marks can be off, because some marks get marked at 4:30, some marks get marked before then. But if you look just to the left of me, you're going to see the Q future and the U future right there, right? So Q, that would be August and Sep futures. If we're exactly in between expiration cycles, then each of these futures is going to weight equally towards UVXY. If we're at the very beginning of the month, then the front future is going to be, whatever the front future is doing, UVXY should be doing 1.5 times that. So if we were to pull up UVXY in the ProShares website right now, we would see that we're about 2/3 waiting. At this point in the expiration cycle, we're about 2/3 waiting for the September future and 1/3 waiting for the August future. So UVXY is going to be affected more by the August future than the September one. So right now, UVXY is going to be affected 2/3 by the September future and 1/3 by the August future. So if we look at the August future right, or the September future right now, it is down 2.3%. So UVXY should be down somewhere around 1.5 times that accordingly. UVXY right now, it's not giving a percent because it's not open yet, but it looks like UVXY is down a little bit less than that right now. It can be hard on the open to track this stuff exactly, and it's easier to do so when you've got like a big move, like when this futures are down like $1 or something, or up $1. But essentially, UVXY is based on 2/3 the September future right now and 1/3 the August future, roughly. And thus, if you see these futures down, then if you see the futures down, UVXY should be down sort of 1.5 times that accordingly, whether the VIX is up or down that day. So you want to look to the futures to see what UVXY is doing, because that's what it's based on. Now, if you want to get even more technical than that, UVXY is based on an index, and people are making markets around this index. However, the actual way that they are mechanically putting UVXY together is using these futures plus swaps. I don't know if that's clear or less clear for you on that particular front. So let's go to the, I don't want to be too long here, but let's go back to the position right now. Okay, so net liquidity right now, position worth $3,098. And let's refresh our memory as to what exactly our position is. Okay, so the position is we are long a put spread in September. So UVXY, and let me try to clear this out of the way here. UVXY, we are long the September 30 27.5 put spread. So if we look at September here, we are long the 30 put and we are short the 27.5 put, and we have that trade on 32 times. We have on one time long the 29.27 put spread, and 32 times we are long the 30 put and short the 27. So right now, it didn't look like it looked like it was pretty far away yesterday with UVXY trading up to 38, but now with UVXY 32 and change, we are closer to this put spread. UVXY indicated down about $1 before the open here, and the position's working right now and seeming more reasonable. Now, I want to discuss my big trade yesterday, which was to roll from I did have on this August 35.33 put spread, and that put spread I had on 30 times makes a maximum of $6,000 if we're below 33 on expiration 15 days from now. Well, what I did was I took that position and I was able to roll it to the SEP position, and the reason I did that is to get more aggressive, to take the $3,000. It was around $3,000 at the time worth the position. To take that $3,000, and instead of having it in a position that could make a maximum of $6,000, I rolled it into a position that could make a maximum of $8,000. Now UVXY has to go down a little bit longer. We have a little bit more time till expiration, but I figured to make that extra $2,000, I would become more aggressive with the position. So I rolled it down to the 30.27.5 spread. Now, let's talk a second more about commissions, because people were talking about this and asking me about this. Everybody has their own commissions set up that they pay, and mine is a penny per contract. Now, when I say a penny, I'm talking in options terms. So if you see options pricing, and you see a penny in options premium, that represents $1. So each contract I trade costs $1 in commissions. If you have a roll, that's a complicated trade. You're buying 2 options and selling 2 options. So each roll that you do costs me $4. So if I've got 30 rolls times $4, that's $120 to, to switch my position from the 35-33 spread to the 30-27.5 spread. I had to pay $120. So I better believe in my mind that it's going to be worth more than $120 to put this trade on. Otherwise, my profitability is getting eaten up in commissions. However, so far it's worked out okay because we appear to be moving lower. The 30-27.5 put spread, we have to be below 27.5 in 29 days for this to reach maximum profitability, which of course is more aggressive than having to be below 33. However, we're on track right now to get there. And the good news is that we don't have to keep this position on forever. We can roll it into something else at some point. And knowing my propensity to overtrade, we probably will roll it into something else at some point. But in the meantime, it's working for us because we're essentially short UVXY. If we look at our Greeks, we can see we are short, according to these Greeks here, 283 deltas. So that means each dollar that UVXY goes down, we should collect $283 essentially. And right now, as we open, this is down about $1. So that's good news for us. There's our deltas right here. Here's our Greeks. So it shows us short 286 deltas, costing $38 a day right now. But if we move down lower towards the strike we're short, this won't be costing us as much. I don't really worry about theta with a spread because I evaluate in terms of how much does the spread cost and how much can I sell it for. That encompasses the whole trade. This theta is showing if we just sit here, how fast this spread is going to decay. And I know that if we sit here, then I'm going to end up losing money because I guess I paid about 85 cents for this spread, and thus my break-even point is $30 minus 83. And now since we're up around 32.50, the spread is certainly going to lose money unless we go lower because it's worthless right here. The 30-27.5 spread, if we expired right now, would go out totally worthless since we're above the 30 strike. So I don't really look at that theta number. I'm more looking at just my risk reward. I paid 80-something cents for this spread, and I know it needs to be, my break-even point is $30 minus 83, period. So if it stays up here, certainly we're going to lose money on it. All right, so we're getting into the open, so I'm going to let you go to trade. I hope this was somewhat helpful. We'll do more of your questions and answers coming up in the next video. Thanks for watching, and good luck trading today. And it looks like, just to update you, it looks like our P&L has gone up a little bit on the open today. So making some money back. It's one of those things with trading that like those key days where like you get some big move or something a lot of times for traders, it's the days that just kind of seem calm, that nothing seems to be going on when we're actually making our money, which seems to be the case in this situation. So there the P&L stands at 42.23. Feeling better than when we got down to $900 on marks the other day. But we'll see how this works moving forward. Best of luck to everybody. Please leave your questions and comments below. And please consider giving $1 on Patreon to support this channel. Thanks for watching, and we'll see you next time.